Look, I just want to start off first with I guess the operating side of this business, which is the ad business, did well, Ygal, and that was expected here. But what's the bridge between the ad business that has made Meta what it is and whatever this sort of world of AI that it's trying to insert itself into?
Yeah, right. So I think that's the problem and why we're seeing the share reaction today. I think the largest factor here on shares post-print is the revenue guidance for 3Q. Now, we saw CapEx move up a little bit on the guidance, but just on the bottom end, and I think probably less than most people expected, less than we expected, especially after we saw the numbers from Google last week. And your question is, I think, exactly the issue is if on the ROIC on that spend and the expectations. Right now, Meta's real only ROIC from the CapEx investment in AI is their ad business. Now they have some other things that are earlier on, like the subscription tiers for Instagram and Facebook, Business AI, which is really centered around WhatsApp, some other features around the rest of the products as well, and things like selling excess compute capacity, cloud business, custom silicon business. Those are in much earlier stages, if they're even really have started at all. And so that bridge has been more challenging for investors to see. And if the ad business isn't going to come in ahead of expectations, I think that's going to create a challenge here.
I did want to ask you about cash flow. I mean, the expectation it was going to come in negative for the quarter. It came in at $784 million with an M, which is incredibly low for compared to what they had normally been posting in quarters past. Are you concerned at all about that, or is that just something you can look through?
I mean, I think the free cash flow story for Meta and for all the other hyperscalers goes hand in hand with the ROIC story, and investors will be willing to accept the pullback in free cash flow if we're getting negative, obviously only to a certain point. But it's the free cash flow pullback, the CapEx spend, debt and equity raises. Investors will be willing to be patient if they see the story on the ROIC side coming through as well. And again, I think we're not necessarily seeing that this quarter, and we'll wait for the call to get more color on. Perhaps we'll get some insights into CapEx spend for next year, where we are on some of the earlier, if we're making enough progress. So if that tail on the revenue side isn't catching up and we're seeing real pullbacks on free cash flow, then yeah, I think you start to get more concerned. The ROIC is going to catch up, or it needs to catch up. It's not going to happen hand in hand with the spend, but you need to have some visibility in that coming through. And again, I don't think we're seeing that just yet.
What do you make of the after hours trading? The stock down about 6.2%. This is somewhat similar to what we saw with Alphabet. They announced that they were going to be spending more. Shareholders didn't like that too much. Is this just part of that trade?
Yeah, I think that's exactly what it is. Investors trying to digest what's acceptable and who's positioned where. I thought the Alphabet print was actually stronger, right? And you saw the pullback there. Maybe the commentary on the CapEx spend was a little bit more. Google raised the high end of the CapEx spend expectations too, versus Meta just on the low end. But Google had really strong cloud business. They started selling their TPUs, and so they have some of those factors outside of the core search business that are really pushing right now and accelerating. I think for Meta, those factors aren't there yet, and investors need to see more from that.
When we talk about, Ygal, this idea of kind of the product lineup, I mean, there's been a lot of talk about Meta glasses and who knows what else Zuckerberg might be working on behind the scenes. Is there a sort of, and not to mention this, whatever this cloud push that they might actually go for, is there a sense here that Zuckerberg can actually not only grow the company, but more importantly, diversify it away from just being, 90% ads or whatever the percentage is today?
I think that's the goal. On the Meta glasses, again, it's sort of this big picture flywheel of all the factors together. And I think one of the things we didn't talk about is the Muse Spark model, right? And their efforts to push that to be a frontier model at among with the best of them, and building a frontier model, getting better adoption of Meta AI. those are also going to be important factors that drive this entire flywheel together. So it's not necessarily the glasses on its own, but I think it's how the glasses, or at least what I think how Zuckerberg's trying to build this, right? How the glasses work with AI, and creating a new surface for AI. I think that's how that has to be the plan here for Zuckerberg. I think we're starting to see the early steps of it. The question is how long it takes to play out.
Well, that's what I'm curious about. I mean, the Reality Labs, I mean, it lost, 4.6 or something billion dollars in the most recent quarter. Obviously, that includes the other, virtual reality stuff, including the Meta Ray-Bans and all that. Is this just, you think this could be a business and not just sort of a pet project that, at some point just gets cast aside when Mark decides he wants to do something else?
Well, we've seen that happen before, obviously with the metaverse, and look, there's been some rationalizations in that part of the business as well, and you've seen some pullbacks in spend, some pullbacks in hiring. You've seen a couple of rifts there, so I don't think it's free spending all the way forever, but I do think if you listen to what Mark talks about on sort of the future of AI and AI surfaces, I think glasses are expected to be a big part of that. So I wouldn't expect that to be put to the side anytime soon. I think that's a big core focus of how they intend to build out their AI projects.